Good day. Happy President's Day. Happy Family Day in Canada. Yeah. Holidays. Okay, let's take a look here. We're looking at the NASDAQ. 5 minute. Here we go. So it's kind of dead today, so I'll show you some trades, from over here, all the way across. So here's a double top. Close enough, doesn't have to be perfect. And it's pointing down on the OSMA, see? So that means the price is going to go down. So if you sold right there, your stop would be at the swing high, 10 points. It went down 26 points. So that was good. And then we had a low, a retracement, and a lower low. Yeah, lower lows. Gotta like them. On the chart, they signify a turning point in the market, and that's what happens. They turn and go the other way. See? Double high. Bye-bye. Down she go. Lower lows. Buy up she go. Pointing up. That means it's going to go up. Up, up, and away. In my purple balloon. Okay. See what I got in here? Stop would have been at the swing low, 23 points. Did we get 23 points? We did. We got 25 points. Got her by the skin of her teeth there. Okay. There's another double top here with all these wicks. Look at it. Crazy. And right down there, and we would have got short here. Right in there. Yeah, so if we was sold it there or stop at the swing high, 11 or 12 points. Did it go down 12 points? Yeah, it went down 13. So there's another winner right there. And what do we have here? Oh, very easy to see. Actually, there's another trade right here even. Wow, lots of trades today for a holiday. Right here, hidden divergence. And right there, like that. See that little blue doodah? See it? You might not be able to see it because YouTube is not clear enough. Or whatever the hell the problem is, I don't know. I'm seeing now on streamers that it looks like they've got a wide screen now, super wide, which makes everything really small and hard to see on the screen. And not only that, it's not clear, it's blurry. So, whose fault is that? Is that YouTube or is that us? We don't have this $1,000, I don't know. No, that's the camera they walk around with and talk into it. It's like $1,000 or $1,400. Probably some of them are over $2,000. But what type of camera do we need to film it on your screen, on your computer, where it's clear? Even this video, you look at it, it's blurry. It's freaking blurry. It's not perfectly clear. So maybe it's on my side. I don't know. I have a freaking Logitech camera. Cost me like $130. I don't know. But anyway, I'm not happy with the clarity is what I'm trying to say. Okay, we got triple bottom here. See that? Right there, just like that. So when was the trade today? Oh, itchy, itchy. Always itchy. Oh. Okay. What I got in long right here. Okay. Stop at the swing low, 16 points. Did it go 16 there? Not quite. But did it hit 16 up here? Oh, yeah. It hit 36 points. And then, ladies and gentlemen, did we have another trade here? We do. We have a high, a retracement, and a higher high. You see that? And this hill is higher than this hill. That's what we need. So we would have got short right in there, right on the opening of that candle. Our stop at the swing high, our stop was 16 points. Did we get 16 points? You betcha, Skippy, we got 17 points. So you see all those beautiful trades today? And it's a holiday. Hey, 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 it's a holiday. Okay. We covered that extensively. The NASDAQ, okay, there was a lot of trades. As you can see, there was like, oh, I forgot the arrow on this one. Let's trade there. So that's 1, 2, 3, 4, 5 trades. All of them hit the take profit. The first take profit, the 1-to-1 R, according to your stop loss. See what I mean? Yeah, you know what I mean. You know. Okay, what did the S&P do? Now, we're going to leave this a little bit more, you know, we're not going to squish it together and look for every darn chart. Oh, I guess we will. I was going to say every damn trade, but look. Oh, look at this. They're all over town. Okay, we'll start here. High and higher highs. Hi, how are ya? Hi, how are ya? Yeah. Okay, so we got short. Oh, right there. Stop at the pivot. Swing high, 16 pips. Look at that. Went down 4. Or no. No. This is the S and the P. The stop was 1.5 points, so that's 6 ticks, I guess. And 1.5 points, and it went down 4.5 points. Okay? Then we had a low retracement, lower low. Okay? Just like on the other chart. And right there's the divergence. It's pointing up, meaning it's going to go up. Yeah. You got long right in here. And it went up like 3.5 points. But your stop was 4.5, so you missed your target by a little bit. Oh well, what can you do when you live in a shoe? And we got higher highs right here. And we got a lower high on the OSMA. And it's pointing down, so we should be looking to sell for the price to go down. Did the price go down? Oh yeah. Right there. Came back and freaked you out, but your stop was right here. So it didn't hit your stop. So you would have got short there. Your stop would have been 2.5 points. Did we get our 2.5 points? Oh, just by the skin of our teeth. There's almost 3 points. Then we had that triple bottom again, just like on the NASDAQ. Okay, triple bottom right there and right there, pointing up, meaning we're going to buy it and it's going to go up, and that is exactly, ooh, running out of air there, exactly what it's going to do. What you gonna do? What you gonna do when they come for you? Okay. There's the stop, 2.5 points. Did it go up 2.5 points there? No. What about if we took it up to here? Yes, went up 4.5 points. So you would have got your target, T1. 1-to-1 risk reward. Would have got it. And what about down here? Is there another one? No, see? It's higher on the mountain peak. It's higher, on the right side than the left, and we need the opposite of that, okay, for it to be divergent. We need this side to be higher than this side, okay? All right. So there you have it. So there was no sell trade here, okay, with the higher highs. All right. Let's move on now to the Dow Jones. What did it do? Oh, a little choppy, sloppy crap. Oh, yeah, look at this. Oh, you gotta hate it when they do that shit, man. You know what happened to a lot of people in here? They were buying right here because they finally thought it was going to go up. And then they're buying here and it didn't go up. And then they're buying here and it didn't go up. So then some of them were going, oh, well, maybe it's going to go down. They sold it down here and it went back up. Sold it here and it went way the fuck back up. And again, they sold it here, somewhere in here, and here, and here. You see that fucking shit? They just kill you. They just kill you in this shit. That's all I'm going to say about the 30. Let's look at the pound dollar now. Now. What did it do? Oh, let's squish it and see. Very crappy. Anyway, I'd wait, of course, till the UK opens right here. And there was a trade. We have a high and a higher high. And a lower high on the OSMA of choice. So we would have got short in here. Okay? Right in there, you would have got short. Stop at the swing high, 10 pips. Did you get your 10 pips there? Did you get more than 10 pips? Yeah, it went down like 35 pips to here. It's a very slow day today, slow grind. Oh, this is on the 15-minute I'm looking at. Jason. Well, it's a holiday. Sometimes you got to look at the 15. You get a bunch of fake outs on the 5, man. Bunch of fake outs. So there's the trade right there. Going back to the NASDAQ. Yeah, it moves too much. There's no way you could trade it on the 15. Well, you could over here. There was a trade on a regular day where it's going to have follow through. It'll work out. But you try it on a day, where it doesn't go anywhere, and you'll get the better trades on the lower time frame than the higher time frame. All I can tell you is you don't just have to stare at one time frame. You can look at other time frames, and you can find divergence trades on there as well. No problemo. Okay. Euro, USD. Yeah. Sorry, I'm just looking at this order I have placed. It missed it by like half a pip or some stupid shit. Okay. Euro. We have, I think we have the 15. That's what we have. And sure enough, yeah, we have a beautiful trade on the 15. We have a double high right there. See that? Close enough. And this coming down to this hill, yeah. And to sell it right in here, yeah. Okay, went down 10 points, 10 pips. This is the euro dollar. 20 pips. What was the stop? Oh yeah, 7 pips. 7 pips. It's so little compared to the NASDAQ or whatever. Okay, that's the euro. We had one trade. It was a sell. You see it. You see it. Pound yen, what did it do? Sorry, my nose is itchy. I'm lifting up my glasses with one hand and itching my nose with the other. Mozi Tabernacle in the freaking sin. Okay. Where's the trade, man? Where's the freaking trade? Yeah. Right here. High. You remember those higher highs we were talking about? And lower lows? And how awesome they are? Yeah. We were. Right there, man. That's the entry point. And there's a trade here too. Oh shit, eh? Lower low. See that lower low? Yeah. And see this going up like this, pointing up. That means the price is going to go up once all the criteria is met, which is a bullish candle closing up above the two moving averages, and the 5 crossing up above the 7, and the divergence, the reason to begin with why you want to take this trade. Okay? Yeah, so first you look for the divergent. That's your reason to do a trade. Then you look for the candle to close up above the 2 MAs. Then you look for the 5 to be above the 7. You see all the criteria, and it's the same every time. It's a process. If you follow that process over and over again, you will what? Okay, but after you enter the trade, you will make money probably. I'm not a fucking financial advisor. Did I tell you that? Okay. This is no trade signal shit here, even though you're gonna get it in the past. But this is the there's a process, a sequence in which you follow over and over and over again. And if you do, just like I do these videos and I do this and then I do that and then I do this and then I do that, it's always the same. It's always the same sequence. It's always the same process. Because somehow after you spot the divergence, it does what it does every time. It doesn't come back to the stop, hardly ever, because I follow a sequence. Okay? And that's what you need to succeed. This is the sequence. First, you look at the chart. You look for higher highs or lower lows. Actually, you'd follow it like from right here. See it come down? See? Right here, you're going, oh, am I going to be looking to buy? We'll see. And then you'll see it set up. It'll go down, go down, go down, go down. Then you go, ah. And then you look here on the OSMA, or whatever you want to use, and you go, oh, yeah, there it is. This one's pointing down, this one's pointing up. Then you say to yourself, oh, all that I need now is a candle to close up above the moving averages, right? And then I need the 5 to cross up and close above the 7, which was right here. So you then enter the trade, right? Let me put the arrow on. The entry would be right here on the opening of this candle, because this candle closed up above and the 5 is closed up above here. So then you would get into the trade. So you'd buy right there, and then what's the next step? The next step is your stop always goes at the swing low, and what's your, the amount of the stop? It's 7.5 pips. So then you measure, you would drag your stop loss up 7.5 pips, which is right here. You maybe get a little bit more to cover the commissions and spreads or whatever. And there you have it. If you wanted to go 2 to 1, well, you can. If you want to go like, if you have a double order, so the first order, you would set the take profit for right here on the chart where you see it, like 9 pips. And then the second order, you would not have a stop. You would have a stop on it, because once it hit here, you would move your stop to break even on the second order here. So then you could go for the 15 pips, which is up here. You go for 2 to 1 win-loss ratio. You see that whole sequence? And once that all, established itself, what happened down here? Did the price ever come back here to get your stop? No, it didn't. It's the same thing over here. We have a high and a higher high. Then we look at the indicator. Yeah, it's looking like divergent. We wait for a candle to close below the 2 moving averages, right? And then we wait for the 5 to be crossed down below the 7. Then we enter the trade. You enter the trade, you sell it right here. I'm not a financial advisor. Right? And your stop is always at the swing high. 13 pips for the stop. Did we get our 13 pips? Oh, yeah. Went down 25 pips to the 189 level right here. You see that sequence? Whether you buy and whether you sell. And the coolest thing is it did not come back and get your stop right here, or it did not come back and get your stop right here. That's it. I just showed you the whole sequence, and it keeps repeating over and over and over again. Do the divergences on the chart look different? Yes. They're not all going to be the exact same because you're looking at something that's always moving. Always moving. So it's going to be different, you know, how would you say? The way it's displayed on the chart is going to look different at times, you know? Like right here, see? Here's this one. It's a short little one, right? We buy. But look at this one. This is a huge one right here. Okay, from here. Oh, maybe not. Hold on. Oh, yeah, it's divergent like I thought. See? This one is a big one. Looks way different than this one or this one. Okay? But anyway, I just wanted to show you all the sequence of the way you look at it and approach it and do it and get winning trades. But I'm not a financial advisor. I'm not giving signals. However, there's one more trade here, and it's hidden divergence. You can draw it to here. Does not have to be up here. Okay? Even though we could do that. Okay? And from here to here it lines up. So this one, this one's going down. This one's going up. And you see how it's, oh, I'm going to confuse myself again. Oh, this one's going down. And the price, yeah, and the price is going to go down. Oh, it's fucked up sometimes. I don't know. Anyway, you would have sold right there. Stop at the swing high, 14 pips on the pound yen. Did it go down 14 pips? Yeah, it went down 24 pips. Okay? So there you have it. Again, trade after trade. Woo! I did a lot of talking today. Holy jeez Louise. Okay, that's all the trades on the pound yen. But hold on, let me show you something here. We got one of these. Let me show you one of these. Higher close right near the 5. Sell it on the opening of the next one, and down it goes. See that? Yeah. What about over here? Over here, ladies and gentlemen. Yeah, another one, another one, another one. Lower close, perfect, right? Buy it right there, and it went up like 15 pips. Yeah, so there's another one there and another one there. Yes. Okay? But you only like to do 2 max. 3, you're pushing it because you don't know if the third one will work. Okay? So let's look at the euro yen now. We covered the pound yen. Okay. Oh, yeah, it's standing right out at us. All these trades. Okay, here we go. See, look at this one, right? See how different it looks? Because it had a swing down on the right side of it compared to this one. See this one? And see this one? See, they look a little different. They're not always going to look identical because it's something that's constantly moving. That's why, you know what I mean? No, like this. See, it's pointing up. That means the price is going to go up once all of the other criteria that I just explained to you in great detail is met. Okay? So, right here, when it got long on the opening of this candle, where does your stop go? Always goes at the swing low, the closest swing low, that is. So the stop was 12 pips. Did it give us 12 pips? Gave us 13.6 pips. Gotta love that. And was there more divergence? Oh, yeah, right here. Hidden divergence. See that sucker? Right here. Right down to here. Okay? And we would have sold it right in here. Boom, shakalak. Stop at the swing high, 12 pips. Did it go down 12 pips? Oh yeah, went down 18.6 pips. Now, is there another trade? Yeah, there is. There is, ladies and gentlemen, there is. Right there. Lower lows. Like I told you, we gotta love those lower lows and higher highs, because that's where you find the divergence after they went and got the gold. The stops. The stop hunts. Shh. Shh. Don't tell anyone. Don't tell anyone. Shh. You know what's so funny? Is I remember when I was a kid, somebody like another kid or whatever would come up to you and goes, I got this secret, he says. I got this secret, but shh. If I tell you, don't tell anybody, okay? Don't tell anybody. And I used to laugh. I go, well, you just told me the secret. If you want it to be a secret, you can't tell me. And then you know what the kid did after that? Oh, he went to some other person. He goes, oh, I got this secret for you. But you got to promise me you won't tell anybody. Shh. Oh, I'm sure you've all come across that. It's funny. It's really funny, man. Okay. I learned a long time ago, if you have a secret and you don't want people to know, you know how your secret will never get out? Never tell anybody the fucking secret. That's all. Anyway, crazy world. So if we would have got long here, the stop at the swing low, 11, 12 pips. This is the euro yen. There's your 11 pips right now. Would have been good. Would have been good. Yep, would have been good. So there's the divergence for that. What's next now? I think it's gold. And gold is way over here. Yes, there's gold. Look at it did. It just dragged its ass all the way down the fucking chart, all the way to the bottom down here. It just kept dragging it. So you can see that there's just a bunch of slop chop, dragged all the way down. So we got to go to the 15-minute and look for the trade, okay? Yeah, right here. I was already looking at them early last night. So, come on. Double top up there. Okay. Finally, I got that all set up, whatever, right here, whatever. See it? If you see the little blue doodahs, this is going down on the OSMA, which is telling you the price is going to go down. But you see, if you put it on a 15-minute, just how much more clear it looks. I know you guys like to call it clean on the chart and whatever. That's a new way of saying it. But anyway, so there you have it. That's divergence right there. Double top way up there, and an arrow right there. So right on the opening, 3 o'clock, you would have sold it, and your stop would have only been 21 pips on gold, or points, I should say. And it went down 76 points to the bottom. However, if you missed that trade and say you showed up right here, you showed up. Well, you could have done one of my, higher close, sell it, down it goes. Here's another one right here. Sell it, down it goes. Another one, sell it, down it goes. See? How do I know to sell it? How do I know? How? What's the secret? Shh, don't tell anybody. Shh. How do I know? How do I know? I know because the 5 has been below the 7 all the way down. So you cannot buy it because it's in a downtrend. That's how you know to sell it. That's how you know to stay in the trade. If you got short up here, okay, there's little retracements back up all along the way, right? All the way down to here. So how do you know to stay in the trade? You stay in the trade because the 5 is below the 7 and never crossed and closed above the 7. That's how. The 5, see the white line is always below the 7 all the way down? That's how you know to stay short. See the 5 is up here above the 7 all the way up? See, senorita? See that? That's telling you stay long. Or it's telling you only buy dips, don't sell, because you're going to trade against the trend. See what I mean, Jelly Bean? That's how you do that. That's how you don't get into trouble. And holy sheep shit, I just won't stop talking today, right? Well, it's a holiday. You got to have something to do, something to watch, something to listen to. Well, now you do. Holy fuck. But you got to admit, and I'm not conceited and I'm not fucking bragging, you got to admit to yourself that, holy jeez, whatever he's talking about, it makes sense. It makes perfect sense. Yeah, and I don't mean to be yelling at you right now. I'm not your father, barking at you, even though I'm old enough to probably be your father, because there's mostly young traders now in their 20s, Still, sure, there's still a lot of old dogs like me, but hey, we teach you good shit, us old guys, okay? And I want you guys to succeed, so there you have it, okay? Oh, but we do have, what do we have here? We have a buy fake, so I got to put on one more doodah right there. That's a hook down. So once it closed here, you would have got in short right here. There's 20 pips if you if you kept holding, because the 5 crossed back down, right? And they smacked it down. So it told you could only sell. So this is a sell trade right here. And it went down to the bottom about 48 pips. Or points. Okay, we're going to look at the last instrument of the day today. And that would be... where the hell is it? Oh, it's right here. Oh, look at this thing. Oh, God. See, remember I was telling you a few weeks ago, check out oil, man. It's really good, man. Yeah, see, and then they went and they fucked it up again. Probably because a lot of people they noticed. A lot of people were doing what they're doing, and they're making money, and then they fucked it up again. Yeah, they fucked it up. Then they fucked it up again. Yeah. There's no divergence here. It's kind of like too far away, but we'll just draw a damn line on there anyway. Well, there's the higher highs there. There was that one. And that one. Let's see. Let's see. Close enough, right? We still got the next part of the criteria where we had a bullish candle close above the 2 moving averages, right? So the 5 also crossed up above the 2 moving averages and the candle, so we would have got long, say right here, And our stop would have been at the swing low, 20 ticks down here. How much did it go up? It went up 60 ticks. So those are your 3-to-1 R. R. Okay? And then we have this over here. Let's make the chart bigger and look at this shit and see what it looks like. Okay. We had a trade here, just sticking right out at us. If you would have sold right here, what happened? Well, it went up and it would have freaked you out because your stop would have been right there. So I would call that a losing trade, probably. Like, because even if you sold it here and you held your, your emotions and you stayed in the trade and it went against you 19 ticks, you think you're going to get 19 ticks here? No, you got 15. So it was a losing trade. And then we have this here. Yeah, it's just a write-off, man. It's not good for oil today. Okay, ladies and gentlemen, I want to thank you for watching and listening. I hope you come back out tomorrow and watch and listen again. So if you could be so kind to hit the like button if you learned some good stuff today of my babbling. Okay, but it was good babble. It was good babble. Yeah. So anyway, have a great day on President's Day and Family Day in Canada. Good luck and good trading.